Hello guys, welcome back to my channel, and today I want to talk about gold. For the whole year I've been only trading indices, and lately I also added gold because it moves almost the same as indices but a little bit differently. Okay, so when it comes to indices, they usually just push, create small pullback, push again, small pullback, push again. Okay, so this is how the indices move. But when it comes to gold, gold usually creates push, small pullback, fake push, then starts going sideways, sweeping highs and lows, and then it's gonna create the real move. Okay, so gold is going sideways much more than indices. The reason why I started trading gold as well, because we have a new entry model especially made for prop firms. Okay, so with this entry model we have trades almost every single day. For example, yesterday I took 4 trades. Okay, so with this new entry model, it's super simple to pass prop firms, and it's also simple to spot every single setup. Okay, so for example, this would be the setup, this one as well. This one is the main entry model that we've been using every single month in 2025, and every single month we've been profitable. Okay, so I want to go over this trade today. I do not want to go over these trades because it's my special model. Okay, so I'm going to remove everything and let's go over this main entry model right here. So when it comes to gold, let me go to 4H. On a 4H, we created this push. So as you can see, as I said, gold will go sideways, create a push, then pull back, and instead of another push to the upside, it will start going sideways. As you can see, price is going sideways, then it creates another push. So once we took out this high, this was our confirmation that I'm gonna look for buys, because as you know, we have people who be trading liquidity sweeps. Okay, so this is buy side liquidity, so they seen it as a sweep of liquidity. On a low time frame, there's entry model for sales. So let me go to, for example, to like 3 minute. When it comes to 3 minute, we have this change of character. Okay, so a lot of people will be looking for sells from this level, for example. Okay, stop loss above the high, target the last low, because this is the buy side, this is the sell side, and they think that this is how the market moves, which is not correct. So when I see this entry model, we took out this high, we had fake move to the downside. This was my entry point, SL below this low, and target right here. Super simple trade. Okay, so all I had to do is wait for gold to create push, then some type of pullback. Then once you took out this high, I waited for price to create some type of low. Once we hit the low, I knew that if we're gonna take out the low, we're gonna have a liquidity above this high, because people seen this as a market shift and they be targeting the last sell side liquidity, which would be, for example, right here. Okay, so once I seen this, this was my buying limit, SL below this low, and TP 1 to 2. Super simple trade on gold. So when it comes to gold, gold is usually moving sideways. As you can see, every time price creates some type of push, the market starts going sideways. So this is the major difference between gold and indices. For example, if you go to US 30, if US 30 creates some type of push, usually it just creates small pullback, push, small pullback, push, and go slower. Okay, so indices are a bit more volatile when it comes to price action. But for the second model, gold, indices, GBP, JPY, and all these pairs that moves a lot are perfect. And even Forex pairs, like the second entry model, is almost everywhere, and we are also using indicators for the second entry model. Some people might be saying like indicators are bad, but if you look at the FTMO interviews, like 90% of the people are using indicators. So if you hear someone talking about indicators are bad, try it yourself, understand how they work. And so if I go back to the gold, this was the first trade, so this was the entry point. For the entry model number 2, I think stop loss was somewhere around here. TP this low. Okay, so we had this last push, then I had indication that market is gonna sell off. I'm not gonna say why, but it's something with the indicators. We also had this low right here, so this was last low before the push. Okay, so this could be used as sell side liquidity. And if you look at this price action, this right here means that a lot of people started to buy from this low, because around this low we have this support and resistance, or liquidity sweep. Okay, liquidity sweep and support and resistance is the same exact thing. So for example, if we get some type of low, around the low, there is support created. And if we're gonna take out the low and go higher, people will look at this price action as rejection from the support level. But if I draw the same price action, we got this low, we took out the low, and people look at this price action as liquidity sweep. And as you can see, it's the same exact thing. It's just having different names. So people be thinking that they trade in liquidity sweeps, but it's the same exact thing as support and resistance. And also when it comes to order blocks, so if I draw the same price action, so this would be the order block, last sell before buy, because that's what people be calling order blocks. Then they're gonna look for buys on the order block. But if I draw the same price action right here, okay, so last sell before buy, but it's the same exact price action as support and resistance. We get some type of level right here, so this would be called support resistance. This would be the retest and going higher. So liquidity sweep, order blocks is the same exact thing as these support and resistance level. It's just having a different names. So when it comes to this price action, we swept sell side liquidity. We tap into the support resistance level. So now people will be looking for buys after some type of confirmation. So for example, let me go to 50-minute. On a 50-minute, we got this huge engulfing, this huge market shift. Okay, so a lot of people will be looking for buys after this liquidity sweep or this support resistance rejection. Okay, they got engulfing, everything going on. Stop loss below the low. And boom, indicators showing me that the market is going to sell off. We have multiple confirmations for selling off, and this is just fuel for us sellers going lower. Okay, once we have some type of this price action, and I see that we created trap for this ICT, SMC, support resistance traders, now I can extend my targets all the way towards this low right here. Okay, so super simple trade. So if you are trading gold and indices, always try to trade with the trend, because if you trade in liquidity sweeps, your win rate will be totally cooked. Okay, so always try to trade with the trend, because liquidity sweeps is just not the best when it comes to win rate and overall profitability. Okay, so that's it for this video. And if you got any question, you can just DM me on Instagram or leave a comment below, and see you next time.